Hi guys, welcome back to yet another one of these lessons. In this lesson, we are doing an income statement. This should really be interesting because this is such a big income statement and 60 marks ain't nothing to play with. So without wasting any more time, let us jump straight into it. So let's see what we're given here. We are provided with information relating to Fralazy Limited for the financial year ended 30th of June 2016. And the question is complete their income statement for the financial year um, of 2016. So you can see here we have the structure, and then we just have to put a little bit more juice, and we'll have everything in order. We already been given the net profit. Maybe you might have to calculate something as a balancing figure. So we just need to be aware of that. And then here they've given you an extract of the pre-adjustment trial balance. You can see there's the sales, cost of sales. They have a question mark there. Interest income also a question mark. So these are the things that we are probably gonna have to work them out in order to get them, maybe with the use of adjustments or maybe balancing them out. We'll see. All right. Let's see. Let's jump straight into it. So the income statement is going to start with sales. So here you've been given sales, and they already exclude allowances. You got 4,777,300, and then let's go and check the information. So the first information, it talks about a credit note. So you issue a credit note when you issue a credit note when a debtor returns goods. So a credit note was issued to a debtor for 37,500 dated 27 June 2016. It was not recorded. Okay, so that's one allowance that would have to record. And then they mentioned that the cost price of these goods was 21,000. And then these goods were placed back into stock. So it reduces our sales and it also reduces our cost of sales. But let's start with sales. So with sales, let's see. Let's also read the rest of the information just to make sure that that's the only thing that affects sales. So the business prices its goods at markup on cost, trade discount, that a lot has to do with cost of sales, adjust the provision, stock count, external auditors, interest and loan. So the rest of the other information is not about sales. So it's the first piece of information that we'll use to calculate our correct sales figure. So what we'll need to do is obviously to take the 477 and then subtract this credit note here for 35,700 because it was not recorded. They said it clearly there. They say was not recorded, so we need to record it. So sales income, we're gonna have 4,77300, and then we're gonna subtract 35,700. 35,700. And then you're gonna have an answer of 4,741,600. 4,741,600. Okay. And then move on to cost of sales. So cost of sales, you're only being told here about the credit note, but it doesn't really do much for you because it just means that cost of sales have to decrease, but you don't really know by decrease from what to what because you have a question mark. But I think information B does give us some guidance on how to calculate cost of sales. So they say the business prices its goods at a markup on cost of 70%, and then they say trade discount of 297,200 was allowed on invoices to certain customers. All right. So if I mark up the cost, 70%, so if I bought it means that if I bought something for 100 rand, then I'm adding 70 to that, and I'm having a price of 170. So if I'm given, so here in this case, we're given the sales. So if I'm given that I sold something for 170, I can be able to calculate back in order to get to the original amount that I initially had. So when I go back to that original amount, I should be able to get back to that 100. But in this case, they've also introduced another element to this, that the sales figure amount that we see, it obviously excludes, it could have been higher by 297,200 had we not done the discounts. So in other words, we didn't actually achieve the 70% markup. So what we need to do in this case would be to take the sales figure first. So we'd have to take the sales figure, which is 4,741,600, and then we would need to add the 297,200 and assume that had there been no discounts, the sales amount would be this much, and then we take that sales amount and divide it by 1.7 in order to get our cost. 1.7 being 100 plus 70%, just give us 170%. 170% is the same as 1.7. So yeah, what we need to do here, we will need to take the sales amount, which is 471,600, and then we'll say plus 296, plus 297, sorry, plus 297,200, and then we would divide this by 1.7. So we'll divide that by 1.17, and then that would give us a cost of sales amount of 2,964,000. And then if you subtract, and also we just need to make sure that there's brackets here to show that we're subtracting. And then if you say 4,741,000 minus 2,964,000, you will get a gross profit of 1,777,600. So that would be a gross profit. So that would be the gross profit, and then we move on to other incomes. So when it comes to other incomes, we will start with the incomes that were given in the pre-adjustment trial balance, and then we'll work out the adjustments, and then after that we'll see if there's any more that we need to add. But let's start. So the first one that we have, if you see carefully, is rent income. It's given as 101,900. So I'm going to say rent income. Rent income, let's say 101,900. And then we're going to need to make adjustments on this thing. So let's see what transaction affects the rent income. That will be transaction H. So transaction H there, it says the monthly rent did not change during the year, okay? And then they say during April 2016, tenant paid 6,000 for repairs to the premises. He deducted this from his rent for May 2016, as repairs are the responsibility of the company. The repairs were not recorded. So he said, okay, if my rent, so he paid 6,000. So he said, okay, if my rent, let's assume that his rent is 7,000. So my rent is 7,000, but I paid for repairs 6,000. So I'm only going to settle 1,000 of the rent, and then they didn't even record that amount. So the first thing that we need to do in that case, because we actually do that money that he actually paid, that 6,000 that he actually paid is actually rent, and then we'll see that the business must have then taken that money and used it for repairs. So we'd have to add that 6,000 to his rent, and then be able to determine what the monthly amount is. And then they say the rent for July 2016 was received. So we know that the cutoff date would be the 30th of June 2016. So if we receive for a month extra, that will fall into the next financial year. So what we'd need to do then in that case would be to find what the monthly rent is. So to find what the monthly rent is, I'll just do it this side. So the monthly rent in this case would be 101,900, and then we'd have to add the 6,000. Obviously, would have to divide by 13 because we received rent for July as well, and that would give us 8,300. And then to calculate rent, we'd come here. Sorry. We would obviously come here and add 6,000 because that was actually the amount that it was paying for rent, and then we'd subtract the rental that has been paid for July, which is 8,300, right? And then your answer there would be 99,600. Cool. And then what's the other one? We also have bad debts recovered and information relating to bad debts recovered. Adjust for provision for bad debts, nope. Stock count, external auditors, interest and loan, corrections must be made on the computer that was stolen, no. Rent, advertising, net profit. So nothing on bad debts recovered. We'll take the amount as is, and it will be 10,540. So bad debts recovered, and we'll have 10,540 bad debts recovered. And then let's move along and see if there's anything else that we would need to add. So let's think about, let's calculate the provision for bad debts and see whether we need to increase it or we need to reduce it. If we need to increase our provision for bad debts, that is an expense, but if we need to adjust it down, then in that case, it becomes an income. So let's see. So we have obviously this balance of debtors control, 116,500, and they tell us that we need to adjust to 4%. But also the thing that we must remember is that there's this transaction here which says that a debtor returned goods and the transaction was not recorded. So the starting point then in that case would be to firstly subtract that debtor from this balance and then get your balance, and then you multiply by 4%. So what you would do is to basically say, what's the amount for debtors? 116,500. So let's say 116,500, and then you'd subtract the 35,700, and then you'd multiply all that by 4%, and that would give you 3,232. 3,232. And then you need to compare that with the current balance that you got. And in this case, we have a balance for bad debts, a provision for bad debts, which is 3,732. So we need to adjust down by 500. So that will be an income. So we'll have a provision for bad debts adjustment. Sorry. Let's take it up a bit. Like provision for bad debts, provision for bad debts adjustment. We know that we need to adjust it down from 32732 to 3232, and that difference there will be 500. Yes. And then let's see if we can find perhaps any other income. The potential other income that I thought of would be the trading stock surplus. Most times it's going to be a deficit. in fact, in all papers that I've ever looked at, it's always been deficit, but it's always worth looking just to make sure that they haven't twisted things. So in their trial balance, we have a stock balance of 209, 500, and then we told there's this inventory that returned, so that should, and it was added back to the stock. So 209, 500 plus 21,000. And then if you, that goes to about 230,500. And then if you compare to this trading stock here, which is 225,500, that is 5,000 above, it's 5,000 above the amount for the actual stock that is on hand. So that is a deficit that will be recorded in the expenses. So now we just need to total up our incomes, and then once we total up our incomes, we'll calculate the gross operating income. So to total up our incomes should add up to 110,640, and then we'll get our gross operating income, which is 1,888,240. All right, cool. And we'll end this video here and we'll follow with the expenses shortly. Cheers.